Investing in cryptocurrencies can be exciting, but many new investors fall into common pitfalls when trading and investing in cryptocurrencies. From poor security practices to a lack of understanding of the cryptocurrency market, new investors can quickly lose money. We'll cover the 10 most common mistakes newcomers to cryptocurrency make and how to avoid them. Before we start, don't forget to subscribe to the channel. 1. Lack of primary knowledge about crypto. New cryptocurrency investors may be attracted by all the hype surrounding Bitcoin and other cryptocurrencies, but investing in cryptocurrencies requires an understanding of the asset class and how it works. Investing in assets you don't understand or trying to trade cryptocurrencies without understanding the basics of how they work is a recipe for disaster. By taking the time to understand the different crypto projects and the goals of each crypto company, you will become a better investor. 2. Ignoring fees. While there are many ways to buy crypto, new investors can jump into buying crypto without understanding how gas exchange fees work. For example, buying crypto with a credit card may incur additional fees, 3% or more, and additional fees from your card company. Knowing which crypto exchanges offer low fees and the best way to buy and trade crypto will save you big bucks in the long run. 3. Short-term thinking. The promise of getting rich quick in the market keeps many new investors short-term thinking. And while there is a chance to make huge profits from crypto investing, there is also a chance that you could lose all your money due to a bad investment move. A long-term investment mindset will help you choose your crypto investments carefully and focus on choosing high-quality projects with long track records. Trying to get rich in 90 days is a quick way to go broke, but thinking about crypto investing as a multi-year process will help you build your crypto portfolio wisely. 4. Getting scammed. As a new asset class, the cryptocurrency market is full of scammers. In fact, in 2021 alone, the Federal Trade Commission, FTC, reported the theft of nearly $700 million in crypto assets. These criminals use sophisticated phishing techniques to gain access to your cryptocurrency wallets and trick you into transferring funds to their wallets. Cryptocurrency scams can be carried out via email or messaging apps, where criminals claim to be acting on your behalf. The wallet can be hacked simply by connecting the online wallet to the app and granting it access to funds. Although this is a common practice for many crypto apps, scammers can use this technique to drain funds from crypto wallets. To avoid being scammed, never connect your online wallet to untrusted applications and store most cryptocurrency funds in offline hardware wallets. Also, never share your wallet password, seed phrase, or private key. 5. Keeping crypto in online wallets. Cryptocurrency is a digital currency and you need a digital wallet to store it. While using an online wallet is more convenient, it is also more risky than storing your crypto offline. Online wallets are more prone to vulnerabilities and hackers can empty your wallet through scams or crypto hacks. The most secure way to store your crypto is in an offline hardware wallet, which is basically a USB key with advanced hardware and software encryption to protect your private crypto keys. 6. Forgetting crypto passwords or seed phrases. Since cryptocurrencies are stored in digital wallets, passwords are required to access these wallets. If you forget your passwords cannot be recovered. Most wallets have a backup seed phrase to access funds, but if that seed phrase is lost or forgotten, there may be no other options to recover your funds. 7. Wrong wallet address. Transferring cryptocurrencies between digital wallets is how you get cryptocurrencies from exchanges or send funds from one party to another. But a common mistake new investors make is trying to transfer cryptocurrencies to your wallet only to enter the wrong wallet address. When this happens, the cryptocurrency is sent to the wrong wallet address and may not be recoverable. While there are recovery services that can help you, they can be very expensive. 8. Use of leverage. New crypto investors may be attracted by stories of self-made fortunes through crypto trading and will try to use leverage to increase their profits. The problem is that leverage trading requires an initial deposit, and if a trade goes wrong, you can lose all your money. Remember that leverage works both ways and can increase your losses. It is best for new cryptocurrency investors to avoid trading with leverage and only use leverage after gaining sufficient trading experience. 9. Overly complicated trading strategies. New cryptocurrency investors are trying to dive straight into complex trading strategies as some YouTube influencer told them to do so can quickly lose money and leave crypto altogether. It takes time to learn technical analysis, conditional orders, and how crypto markets work. Investing in crypto can be really easy. There is no need to develop a complex trading strategy to grow your portfolio. Just like traditional investing, you can dollar-cost average into cryptocurrency without active trading and without having to stick to crypto charts 24 hours a day. 10. Order errors. While some cryptocurrency exchanges, such as Binance, focus on making it easy to buy cryptocurrency, many have complex order books and trading platforms that can confuse new users. A single decimal point error when placing an order can cost thousands of dollars, multiplying losses exponentially. In fact, a seller recently made a mistake by selling a premium NFT for 0.75 Ether instead of 75 Ether, losing almost $300,000. To avoid these costly mistakes, be sure to check your order or transfer before submitting it. Cryptocurrencies are irreversible, so it is best to verify before submitting a transaction. Investing in cryptocurrencies can be overwhelming, especially if you're just starting out. But avoiding these mistakes can help you become a more confident investor and save you from losing thousands of dollars due to a lack of expertise. If you enjoyed this video and want to support me, please subscribe, leave a like, write a comment on this video and share it with your friends.